Been waiting quite a while. That's why I'm here to take care of you, okay? We're going to be talking about my portfolio today, specifically the Robinhood portfolio. It's my main portfolio. We're going to go into every position here, let you know my opinions on the stocks, obviously. Hope you enjoy. A little bit of transparency. Always going to be out there telling you what we got going on. So, obviously, this is a portfolio. You look overall. We started this bad boy in July of 2017. We've been in this one a nice bit of time now, nearly 4 years on the portfolio. Overall, we're up $16,365 or 91.5%, valued at $34,265.59. That's the portfolio for you, baby. That's what I'm talking about. It's pretty nice. So let's start. Let's just go into position by position. I have it pretty well segmented by sector, so you have an idea of what's coming up next. But we're going to start with the number one position I have on my list here, and that's going to be Apple. You see that? It's not alphabetical, guys, okay? Apple just is number one, okay? Apple, it's a position I'm super proud of, and I think you might be able to see why. So Apple, my average cost on this bad boy is $46.97 a share. Obviously one I owned prior to the stock split. As you can see why this average cost is so low, because it hasn't been there. It wasn't there, since the split it hasn't been that low. 21.54 shares, makes up 7.9% of the portfolio. Overall return on this bad boy of $1,700 up, or 169%, baby. So very nice return on Apple for me. Definitely one I plan on holding for the long term, because there's plenty more gain to be had there. Second up is Facebook. I've been talking about this one quite a bit. Average cost of $167.49 on this bad boy. 9.18 shares, right around 9% of the portfolio. I'm up $1,500 or 99.23%. Good return on Facebook as well. I think there's a lot of room to grow still beyond where it's at. Then we have Microsoft, a smaller portion of the portfolio for sure, but an average cost here of $93.27 at 4.37 shares. Returns fantastic on this one, $696. A lot of 69s today. The brain's not just thinking that, it's you thinking it, not me. Up 170%. That's a nice return there on Microsoft. Really happy with this one. Expecting a lot more return there too. Disney, average cost of $102.07. If you remember, my cost basis used to be under $90 on this one, but I recently purchased some more. So that's why you see a little bit of an increase in the average cost from where it used to be. 7.29 shares at 3.76% of the portfolio. I'm up $543 or 73% on this one. So I like the return, and I do think over the next 5 years, Disney, I'm all happy with it. Then we have another one of my tech holdings in Cloudera, okay? Definitely a smaller position for me. Average cost of 7.9. 15 shares on this bad boy. I just bought it as a 15 share Marty. Makes up only 0.69%. I mean, I'm telling you, they're everywhere today. But I'm up $119 or 100%. Pretty nice, because it's a position I've had really only for right around a year at this point. So it's very nice return for me there. Then we have AbbVie. Cost basis here of $73.30. Really like this one and what it's been able to do for me. 4.24 shares, 1.39% of the portfolio. Overall return of $165 or 53%. But obviously that excludes dividends in these numbers as well. Which with dividends we've made a lot more money than that. Okay. Then we have Gilead Sciences. One I recently told you to buy, and if you did, you'd be pretty happy, because let's just say over the last week, we've seen decent return, okay? Average cost basis of $64.94, 7.27 shares at 1.4% of the portfolio. I'm only up $18 or 3.95%, with dividends up more for sure, but one that's been very up and down. Ford is a position I'm super happy with. It was a stalemate for quite a while. Cost base on this one's $9.23. I've got 70 shares. This is one that I bought early on in the dawn of the portfolio, and it wasn't moving much. Recently, though, we've seen some good reaction here. Overall, up $447 or 69%. I can't make this stuff up. I can't. I'm not making it up. look, these are real percentages here. I did not edit the source code. But like Ford, what they're able to do for me. Then we have New York Community Bank, one that I've literally had since the dawn of the portfolio here. Average cost here of $10.71, 28 shares, 28.08 shares. Total return of $39 or 12.98%. Not a significant one when you're talking about 4 years worth of return, but it does pay a pretty hefty dividend too every year for around 6%. So I've been getting that in terms of annualized return too. Anyone else see that flash? I know I did. If you didn't know, Google Chrome, it was not responding. Then we have Charles Schwab, another financial here. This is one that obviously the cost basis is wrong on it. I used to own TD Ameritrade. So overall, this is what I got from owning TD Ameritrade, as well as some bit of a cash position too. But this is what I got is these Charles Schwab shares right now at 4.03 shares. Obviously, the return is not quite accurate on this one because it doesn't necessarily account for the old cost basis I had on the TD Ameritrade position. So not necessarily fair to see on that, but not too bad. I'll say I got a 10,000% return. Then we get into a little bit of retail here, okay? A little bit of retail. We start with Target here. Cost basis at $95.19, 6.78 shares. Really like this position as well. I'm up $954 or 147%. This has been a really big winner for me. Target has. We have Kohls. That's right, another big winner. Another big winner. Average cost of $25.96, 16.18 shares. I'm up $466 or 111%. I like what this one's doing. And obviously before was up quite a bit more prior to 2020, but that's okay. The recovery's there. We're doing well. Tapestry brands doing really good here. Tapestry cost basis of $17.24. When I was buying in 2019, 22.8 shares. I'm up $610 or 155%. So really nice return over a 2-year position, really, in my opinion. One I'll be holding though, we have Stitch Fix. That's right. There's a lot of clothing retailers here, baby. I trust the recovery play. $22.89 a share. 10 shares of this bad boy, making up 2% of the portfolio. Total return at $432 or 189%. Good return on Stitch Fix. Really like this one. Really like the position. I do. It's made me some good money so far, and I'm hoping to hold on to it for a longer while. Home Depot, again, since the dawn of the portfolio, this one's been lasting. $161.08. Obviously, only on 1.02 shares. The 0.02 is from dividend reinvestment. I purchased one share early on. And almost wish I had some more. We have a total return of $153 or 93%. It's pretty darn nice on this one for Home Depot. We have CocaCola. That's right, getting into some consumer staples here. $45.22 is my cost basis. 7.45 shares. I'm up $77.78 or 23%. Obviously not significant return. Dividends been pretty nice on this one though. In the meantime, Starbucks. We got more beverages, baby. I'm saying baby a lot, but don't take offense by that. I'm just being very affectionate towards you. Average cost of $53.19 on this bad boy, 2.04 shares. Nothing massive, but the return pretty massive, $119 or 109%. Yeah, nice return on Starbucks. Been doing some good stuff there. Then we have iRobot. More of a tech company, but it's down here, okay? It's down here on the list. Don't bother me. Average cost of $52.38. 9 shares, making up 2.6% of the portfolio, up $439 or 93%. So I like the iRobot return as well. One that I believe still got a lot of room to move upward. We have Micron. I've held this one for quite a while too. 10 shares at $45.19 for a total return of $353 or 78%. Good return on Micron. Obviously very happy with that. That position. Can't lie to you. Happy with all these positions, really. Can't lie to you. Otherwise I wouldn't hold the positions. That makes sense. There's some, we'll get into it. But Cisco, $39.05 for the cost basis. 5.4 shares. Total return of $81 or 38%. Cisco, pretty consistent player. It's a good rock to the portfolio, good rock. Pass me the rock. Then we have Garmin. Garmin, really actually impressed with this return. It's one I bought to trace an options play that I was making, which actually ended up being profitable for me, thankfully. But cost basis is $80.39, 1.02 shares because of dividend reinvestment, up $63 or 77%. Whoops. Right-clicked on that one accidentally. You hate when you do that, don't you? I know I do. Then we have ADI, Analog Devices, chip maker. Cost basis here of $80.07, 1.019 shares. Again, that was based off of a dividend reinvestment over the last couple of years. Total return here of $86 or 106%. It's pretty nice. I like that return. I certainly do. Then we get into my, not quite ETFs, that's right, we got some more plays. HPQ, held this one for quite a while. Very, very happy with it still too. I'm happy with my positions, what can I say? $17.96 on the cost basis, 14.2 shares, total return of $174 or 68%. We'll take it. We'll take that as a win. Then we have Activision Blizzard. Okay, Activision Blizzard, cost basis here, not too bad, $56.97, 2.02 shares, total return of $80.78 or 70%. Now we get into the ETF segment, not too bad here. Starting with none other than Realty Income, the monthly dividend company as it's known. Obviously, these are companies that doesn't show the dividend into my gain, so some of the gains might not necessarily be as high as some of the other stocks, but with dividend return, a lot of these are averaging around 6 to 7% yields. You add that in the annual return, pretty nice. But cost basis here at $54.91. I have 29 or 21.99 shares, so let's just say 22 shares, okay? Total return of $342.95 in capital gains, or 28%. So still even decent capital gains on that one too. IRM, one that recently has just taken off for me, really nice to see. Cost basis here, I've been selling this one for a while. Okay, cost basis of $32.16, 34.04 shares for a total return of $467 or 43.5%. With dividends, it's up quite a bit more, quite a quarter. OHI, Omega Healthcare, cost basis here of $28.65, 23.9 shares. Total return here of $199 or 29%. Again, really good dividend payer, but capital gains have been pretty okay. ABR, now this one is a beauty, baby. It's a beauty. Average cost of $8.86, 79.29 shares. Return here is fantastic. If you look at the capital gains here, $817 or 116%. Really nice for a company also yielding 8% annually. That's a huge win for me. I love that stock. Definitely glad I own that one and quite a bit of it. We have Apple Hospitality. Average cost here $14.23, 65.6 shares. Total return of $141 or 15%. Yeah, nice stuff. Then we've got a little bit of ARI, Apollo Commercial Real Estate. $11.23 on the cost basis, 69.13 shares. Obviously own a lot of these ones, thankfully. Up $371 or 48%. I like seeing that. Capital gains plus a great dividend yield. Makes me happy. NRZ, interesting one, obviously, position for me. Cost basis of $9.99, 35.09 shares, up $45 or 13% in capital gains. So, yeah. Then we have none other than PSEC, Prospect Capital. $5.84 on the cost basis here. 45.95 shares. This one pays monthly as well, but still capital gains nice. I mean, this one's yielding pretty high. With total return though still at $156 or 58%. I like seeing that. Then we get into the ETF segment. These ones I don't typically go into cost basis here because it's not necessarily as important, but you have a couple new ones since I last talked about this. We have JEPI, which is a JP Morgan equity fund. Really do like this one and the performance I've been having so far. It's a pretty large position for me. I will click on this one just to show you the new addition here. 18.29 shares. Definitely a market value over 1,000 already. Is really nice with a great yield on this one. So it was one that I felt pretty confident in owning. I think it'll be good for me. And my other new ETF, which I'll throw on here as well, is SCHD. One I just added 2 shares of. So look to see some good stuff out of this one as well. Not a massive position so far, but again, I'm working on diversifying the portfolio lately to hedge against potential downward movement. Then we have SPHD, 9.82 shares. SPYG, 3.9 shares. SPYD at 7.17 shares. KBWD at 40.44. You've seen that position increase for sure. KBWY at 31.63. DIV, Super Dividend Fund at 11.32. DES at 2.06. And SNSR, the Internet of Things Funds, at 1 share as well. Then we get into some more stocks here. This is my speculative play on the bottom here. We have NEO. You know NEO and my history with it. Quite a bit of history there. Cost basis of $2.07. 25 shares right now. Used to own 100. Oh, man, we've made a mistake selling that, didn't we? Still up $1,000 or 1,998%. Nearly 2,000% gain there. Is freaking incredible. Very happy with that one, even off just 25 shares. Then we have Google Chrome not responding, but we're good. Then we have Energist right after them. Once it loads, you're going to be happy with this one. Are you? Not really. Nothing too crazy here. $2.79 a share, 75 shares. It's one I've built up. It's a spec play, but I think this could be worth quite a bit over the future in the next couple of years. Up $18 though, or 8.6%. Nothing crazy, but it's not a lot of money, so it's not hurting me to have it in there. And we have Plug. I added Plug Power back, believe it or not. You didn't think I would, but I did. Cost basis here of $26.01. 11 shares. Already up $81 or 28.37%. I've held this one for about a month now, so I'm really happy with that return. I felt the downward point was reached there, and I felt like there was some upward mobility to be tapped over the next couple of years, so that's why I went for it. So I know it's crazy of me, but I bought back into Plug. Don't think I'm crazy, okay? Then we have New Age. Used to be New Age Beverage company, but no longer now. It just goes under New Age after acquisitions made. So this will make my average cost and return completely unavailable, but we have 200 shares of this bad boy. My cost basis really was right around $2.79 when I owned New Age Beverages, but since the merger, it got rid of my cost basis. So technically, I am down on this position. Not an exciting one, but I do think over the long term, it'll be pretty good. Wow, do you see what's going on there at the bottom of your screen? Oh, that looked pretty rough. We have a free stock I got actually, so you'll get a free stock real quick if you join me. Join none other than this Robinhood goodness. We'll get a free stock, that's right. And then one I just added as well. Just found it, not too long ago. I own this one for a little while now. USOI. Crazy one too. I know it's a little bit of what some may say yield chasing, and it kind of is, but I don't have any exposure to oil, so I think this is an alright one. The yield's over 25%, which is a little bit crazy, but 15 shares of this bad boy, so it's not really money I'm going to miss. $75 I put into this one. Nothing I'm too afraid of here. Obviously up just a few cents, so nothing super crazy there. That's my Robinhood portfolio for you. I hope you really enjoyed that. and have a great time. Again, it's quality stuff. I hope you enjoyed. Let me know what you think of this one. If you have any ideas for me on what to do. Hope you enjoyed.